next question was from Teresa Kaufman, was earlier. I'm mildly bullish. Earnings are January 19th in IBM. Is there an option play going into earnings? IBM is the 19th. I'll pull up IBM. Can you give me an idea what she's mildly bullish? So I'll, Teresa, give you my thoughts there.
And I'll give you some ideas on the stock itself.
Okay, so let me first look at the weeklies in there, which aren't going to have any impact because they're going to be gone this Friday. And the earnings are the next week, so we have to wait for the next ones, which aren't going to be any because it'll be the expiration. So we're going to deal only with the Jan monthlies. So you're mildly bullish there, Teresa. Do you have any position on? Is a question I first would like to ask.
Right, exactly.
In IBM, Teresa, do you have any existing position on? That'll be a big help. Or you have no position and you're thinking about it.
She doesn't.
Initiating a position. Mildly bullish, so I would assume that you're talking about maybe 190. There again, when you're talking about something like that, you've got levels in January. It's right around expiry, right? Isn't expiry the 20th, 21st? Yeah. Friday is the 13th, so 20th. So it's the day before the expiry. So any of these verticals, Teresa, are decent buys for you thinking the stock's got a chance to get to 90. The 185, 190, for example. Buying that at 196 and selling it, you're paying basically $1.34 for a 5-point vertical. So you have the opportunity to make 366 in that vertical. That's not a bad play. You're putting a little bit out there to try and capture obviously 2-to-1 money a little bit better if the stock goes above the 190 level. If you don't think it has a chance to go that high, maybe you want to look at a more expensive vertical. But you know, I'm not a big fan of buying verticals that are $2.50 to $3 in valuation, which is what the 180.85 would be. And the only reason why it's there is because it already has some intrinsic value because the stock is 182.35. So the 885 vertical theoretically has intrinsic value of 235 in January. I like the 185.90 as a cheap play. If you think the stock's got a real opportunity to explode here and go much higher, then maybe what you might want to do is a little ratio where you sell an 85, which is right now out of the money, and buy 3 or 4 of the 190s. And therefore, if you get an explosion that's through 90, now you're going to have a real opportunity to make some money. Because what will happen is you'll have basically, theoretically, the one negative unit, which is a short 185, and you'll be long, let's say, 4 of the 90 units. So in that scenario, you're paying $1, you're selling at $1.92 and buying 4 at 66. So basically, if you've sold 1 and bought 4, your net debit in that position would be basically 72 cents. Okay, is what you put on the table to create a 1/4 ratio. And what that gives you is a big explosion to the upside. And if the stock goes in between 85 and 90, you're going to see an opportunity to adjust or get out of your position right then and there, probably for a profit. Your only bad scenario is if the stock were to get to 85 and slowly creep upward to the 90, and you never got a chance for your 90s to be in the money. Obviously, if the stock goes below 85 and the earnings are negative, you're going to risk the 72 cents. So those are the 2 plays that you could possibly put in there to take advantage of what you think might be a little bullish move or a bigger bullish move.